All right. What's going on, you guys? This is Eric here with Investor Central Club Stacks Software. We're going to go over this upcoming week's earnings that are going to be reported for the week of July 28th, 2025. All right. If you guys are in our Discord or if you guys are in Stacks, this is already posted in my channel. So if you guys are in there, you do have a way to review this as we go. But we will share this as we talk about each of our earnings reports and discuss the things that we see. Max will be joining us very, very soon as well. Oop. Yeah, okay. And Max will be joining us very, very soon as well so that we can talk about the data, the expectations of earnings, the EPS, and the revenue. So that being said, we got some really, really good names coming up, some big hitters. We've got this week, as you guys can see, we've got the big ones that I've got listed off for us are Waste Management, WM, United Healthcare, UNH, SOFI Technologies, PayPal, Boeing, UPS, Spotify, Merck, PG, Procter & Gamble, Visa, Mara. We also have Starbucks, Seagate, STX, MO, Altria, TEVA, KHC, Kraft Heinz, HUM, Etsy, Meta, Microsoft, Robinhood, Carvana, Lam Research, Qualcomm, Ford, ARM, CVS, Roblox, ABBV, ABBV, NCLH, Norwegian Cruise Lines, CCJ, MasterCard, MA, Apple, Amazon, MicroStrategy, Coinbase, Reddit, CVX, and Chevron, XOM. So we got a lot to go over. Very likely we'll probably get through the ones for Monday and Tuesday. We've got a lot of big names. For our Wednesday and Thursday names, we'll very likely do them on Tuesday after close. We'll do our closing bell show then and do our closing bell show on Wednesday as well. We might touch upon some of the bigger names, Meta, Microsoft, and Apple, Amazon. We'll try to get to those today as well. Okay. So every single one of these earnings, we've already done a little bit of preliminary research and charting for you guys. So if you guys are in our Discord, you can follow along in there. I've already posted quite a few of them for you guys to start. So first off, Waste Management earnings Monday after close. We do see that they're in this upward channel at this point, just bouncing up and down at, in between. The point of control is this big volume line, this orange line at 205. Stacks doesn't show very much activity at this point. We've just got some sell of calls, which aren't the strongest. We want to see buys if we want to see a directional move. So selling these calls could mean that they do have this and they don't expect it to go up past these values, 230 and 255. And as you can see, we're sitting right at about 230 as of close on Friday. So Waste Management, definitely a little bit smaller of a earnings report to expect because everybody's really looking at Apple, Amazon, Meta, and Microsoft this week. So real quick, let me refresh this for us. Okay. When Max joins us, I'll have him go over the numbers for Waste Management, and we'll discuss that from there. Here's a big one. UNH, United Healthcare. We've got earnings Tuesday before open, and I do notice a little bit of potential for Wyckoff accumulation, or it even could be a redistribution. We will very likely see some bouncing around in this area, but we already had a big sell-off and a rejection from recent news that came up with with United Healthcare. I believe this is when Luigi Mangione had his involvement with the company. We had a bit of a bounce back already. Drop toward that 240 range, bounce back up. So we'll have to see. This is still too early to tell exactly what the range is going to be in terms of Wyckoff, but there is potential there. So I drew a little bit of a box right there. 302 is basically the point of control. So if we are able to get this back above that value, above that range, we could see a bit higher to come. But as of right now, we've seen the preliminary supply. We've seen the selling climax. That big volume bar is the indicator of that. An automatic reaction and a secondary test where we've peaked up above. So you can see these green circles that I've put in here can be attributed to these two, the pop and then the drop in that situation. So do we see, a chop back up toward the top of that range? We're going to have to see. Wyckoff does show that between the selling climax and the automatic reaction is where we're going to see most of the action back and forth. So this could take some time. I would say, down in December, I do think that we have a bit more of time before we could see this head back up. But overall, as a company, that sell-off, especially with what's going on in stacks right now, we're seeing quite a bit of buying in terms of the company. We've got a lot of calls that came in over the course of the last week. A lot of them are aiming for 2026, but we do have a few short-term ones. 801, 815, aiming for above 300. So if we do see a solid earnings report where they are able to beat out expectations and quiet a little bit of the fears that have been in the markets according to this name, we could definitely see it pop up above 300. So that's kind of what I would be aiming for. The other thing too is that this is FinViz, which is a great way to visualize a lot of financial companies. They have a way where you can see all of the earnings, or not only the earnings, but you can also see the upgrades and downgrades that people are giving them in terms of the big companies. And we can also take a look as to what all of the news happens to be. At this point, everything seems to be fearful. We've got a lot of target prices in terms of their downgrades are all aiming still above that 300, except for one aiming for 270, and we've already beat above that. So I do think that there is more of a upward possibility with this name than down. All right, so that's UNH. We do also have quite a few people that are playing the upside on this one, and you also want to take a look over to the right side where you see a lot of equity buying over the course of last week. We've got millions of dollars being spent, people just accumulating more shares of UNH. So that's something to keep an eye out for. I definitely would aim more for the upside on this earnings report than down. But yes, there was some more negative. I think it was Centene that reported that pushed some of these names further down due to it. But because we're trading near the bottom of this range at this point, so yes, we could see it come down further, come back down toward the bottom of that. But as of right now, I would say there's more of a possibility of an upside pump for UNH. All right. What's going on, Max? We're already live. I don't see that I don't think we've got too many viewers right now. I do expect a lot more people to be coming to watch this after we've finished our live stream, but we want to get all the information out for them. So far, I've just talked a little bit about waste management. There wasn't very much going on the tape, just an upward channel. And United Healthcare, which I'm sure you've got some content to talk about with that. So I'm going to turn it over to Max for some of those. Do you have anything for waste management?
Yeah, I did a whole write-up for them.
All right, let's take a look. So if you guys are in our Discord, or even if you're in our Stack software, you guys can always go under the ICC Traders tab and look for TG trades, and you can see everything that he's posted just as well. So let's go see, where's waste management and your post for that.
Of course, now my computer wants to turn on. Jesus Christ. My whole computer just crashed like right before, like as soon as I went to go join the Zoom call, everything just bricked out and blacked out. And then it was like, we are updating your computer. And then my MacBook, I hopped on this, went to go join Zoom, and they're like, we need to update Zoom. I was like, are you fucking kidding me? Like, I can't catch a break right now. So let's see, Substack. So waste management.
Did you post it on your channel? I don't see it here.
I think
Should
so.
be on there.
Yeah, it's from a while ago.
Oh yeah. Okay, so probably
Oh
last
no,
week.
I did not do waste management. No, because there was nothing like, even on their earnings thing, it's just a lot of speculation on, are they going to be able to rebound and demand, basically? I don't know. It was not there. It was just mainly about like their EPS and revenue expectations, which are all up. But I did not have a feeling one way or the other about it after kind of reading what people are expecting from them for the most part. So
Yeah,
I'm
that's fair. That's fair.
not very confident, or I guess like interested would be a more accurate word in what's going on with their earnings, because I read their report and I was just like, okay.
Yeah, I
That's
agree. I agree. United Healthcare then. Did you get a chance to do one for that?
yes. So United Healthcare, I didn't post it, but I did a bunch of research, and basically they did confirm they're going through a DOJ probe. So like that's a real thing that's been confirmed by them, which is not great news. Um, and for the most part, with that coming into play, that kind of changes the scope of their landings and what the expectations will actually be versus what Wall Street's expecting. Because if you guys aren't aware, a DOJ probe is kind of a death sentence in terms of having a company that will be profitable at some point in the future. So with United Healthcare, I'm expecting a big sell-off to some probably whale levels of support, and then we'll probably see a rebound, or they get completely shut down because this DOJ probe becomes a lot uglier than any of us could even wrap our heads around, and they may have some serious problems headed down the pipeline for them as well. So that I'm not. I think with UNH, I'm expecting a nice little sell-off probably.
Okay.
I don't see it really rebounding. Before the probe, I saw maybe a rebound just because like it's healthcare at the end of the day, and yeah, they're shady, but point me a healthcare company that isn't shady, and I will show you a woman who's never cheated. So it's kind of that theory. They all kind of have their caveats and their pivots. The healthcare industry is messy. People are getting a little more aware as to their dirty practices, thanks to United Healthcare. Unfortunately, they're kind of like the rocket that is propelling a lot of these issues in a sense. So yeah, I'm definitely not a huge fan of UNH right now. I am on the short side, but in terms of their upward mobility, I think a person without legs has more upward mobility than they do right now.
Okay. Yeah, I would say Stacks is showing completely different, but I do know that DOJ probe news just came out Friday, wasn't it? It was
Yep,
very
and then
recent.
they didn't confirm it until like damn near end of market. That's why
Okay,
I'm mixed on it,
that's why.
because I had looked at stacks and I was like, okay, well this is overly bullish for like literally having the DOJ just go in and not it's because it's not like a competition thing for this probe. The probe is like they're billing people incorrectly for like billions of dollars. So like that's part of their revenue bottom line revenue. So it's kind of like, do you expect good results when those results could be potentially wiped out if this probe goes through? or if their discovery ends up uncovering what they're hoping to find. Because if it does, then again, that's going to just draw up a whole line of issues for them, because the thing they're getting probed about affects their bottom line, which is the only thing people care about for earnings at the end of the day.
All right. Yeah, I mean, if this didn't come out, I definitely would be definitely pushing it more in the bullish side of things, just because that's what Stack's saying. My question is this more fear than, fear versus greed? We're definitely in a very fearful stage for this name at this point. And so part of me says we should be looking to the upside for that, but you are correct with the DOJ probe. There's still too many question marks around that at this point. Are the lawyers going to be able to figure something out to get them out of it, or is this really a death sentence for the company overall? So one of those things where, I mean, we could even see an earnings pop and then a sell-off afterwards, right? I think that could be very possible. So maybe an earnings pop and overnight, and then we could probably just see big money be taking their profits off the table, and it could come back down toward the lower end. But higher end, I would probably say that 300 is a really good pivot for that. And then for our selling climax, we could definitely very easily see down toward 257 if this DOJ probe turns out to be affecting them quite a bit. So, but like you said, oh my God, healthcare taking advantage of people and not doing things correctly. Like, it's not exactly huge, or it's not new news for anybody that's that lives in America. This is kind of expected, but we'll just see if there ends up being any sort of down or repercussions due to this DOJ probe. So, all right, next one. Oh, I like this one. SOFI. We've got. Let's go into our Discord and discuss this first. SOFI. I like to show you guys this here. We've got this distribution, this accumulation pattern. We have a reaccumulation pattern where it popped afterwards. And the thing right now is we're trying to figure out if we're going to be seeing another distribution pattern over here on the right, or we're more likely to see a higher than previous highs. So could we see this breaking that 24 to 26 range, even 28 from when it first IPO'd and had a huge run up? The thing I would point out too is this reaccumulation pattern. We got to understand this tariff tantrum back in April shot it down below this wedge, but overall it's still taking this pattern where we have last points of supply and signs of strength heading up further. So overall in the long term, I would say probably, look back on this name in November. We very likely could be seeing higher for this name. And our stacks is showing kind of a mix between calls and puts. A lot more puts came in over the course of this last week, where we're seeing this name, kind of getting pushed down just a little bit. A lot of expirations for, 8/15, which is the next monthly expiration coming up. Our unusual calls here from the 23rd, aiming for the end of next month above 25. But the only thing I don't really love about that one is it's only 65K being spent. There's actually 1.18 mil being spent for October for it to be below 17. And also big money puts 2 mil being spent for it being below 19 by 8/15. So a little bit more of a bearish push in terms of the puts that are being taken out. We do have 2 calls that were taken for the 22 strike, but these are fairly small compared to those big money positions that we see. So PE ratio is fairly high, 51.24. But as we've seen with names such as Palantir and things like that, if there really is future growth for a company, we could see it actually headed up further. Let's take a look at what Max has to say in terms of SOFI on the data side.
It looks like EPS is expected at 0.06, which is a 500% gain year over year. That's pretty aggressive. Estimated revenues at 805 million, which is at 33% year over year. Sentiment is bullish, but it's priced to the moon. So that's a little bit of a red flag, as the ladies would say. But let's talk about some numbers here. The stock has more than doubled in 3 months and is up 175% year to date so far, hitting a new 3-year high at $22.74. But when a stock gets that hot, expectations follow. So the question now that a lot of people have going into this call is this the beginning of a fintech empire, or are we looking at a peak before a major correction? Now, top things that they're going to be watching in Q2, top line growth is still cracking. SoFi expects that 805 million in revenue this quarter, 31 to 34% year over year. Fee-based revenue is booming thanks to momentum in its loan platform business. The LPB is what they'll probably shorten that to on a call. SoFi added 800,000 new members and 1.2 million new products last quarter alone. LPB is capital light and scalable, basically a fintech dream model that doesn't blow up the balance sheet. For personal loans, that's another thing. It's their growth engine. Again, SoFi is a bank, so what do we care about with banks? New loans, because how do they make money? The interest on those loans. So lending remains strong with them, especially personal loans and now home equity. SoFi's $27.3 billion deposit base lets it fund loans cheaper than legacy banks currently. Expected cost savings from deposit funding is $515 million a year. SoFi Invest, Money, and Tech is their triple threat. Invest is 21% year over year growth currently. Exclusive access to private companies like Anthropic. Money, their high yield banking continues to attract deposits, and that is true because I want to say it's 3.5% or 4% for just having money sit in your account. You get APY from that. So I have a SoFi account. I use it religiously. Tech platform, quiet killer. Adds sticky recurring revenue via their partnerships. So that's kind of their big thing there. And yes, crypto trading is making a comeback. Risky, maybe, but investors do love a little spice. Now, why does this matter? Macro tailwinds. Interest rate cuts in 2024 gave fintech a shot of adrenaline. It's a disruption play as well. SoFi wants to be a top 10 US bank. That's not just PR, it's scaling toward that with asset growth. And then also high expectations. Trading near price targets, any stumble could trigger a sell the news reaction with them. So it's definitely going to be a very risky earnings, because another thing is the risk. Is it too much too fast? The SoFi valuation right now is generous. Price to book is high, and analysts mostly rate it a hold, not a buy right now. The biggest risk, all the good news might already be priced in with them. So that's another thing that we need to consider as well. And the things to watch for in their conference call will be student loan or origination momentum. So it's a post-Trump policy clarity for what's going to go on with student loans, progress on platform scale and margins, crypto and new product rollout traction, and home equity expansion amid real estate shifts. So really, it seems like this could be a case where we're seeing a lot of the things that would make them attractive for earnings or a killer for earnings, quote unquote. Those things could have been priced in as they were happening versus them kind of releasing all of that during an earnings call, which a lot of smaller companies like a SoFi would traditionally do. So I think all good points here. It's moved very aggressively. Doubling in 3 months is a little bit scary, if we're being honest. So yeah, I don't know. I think this might be a fade the news potentially, because I don't know if they'll be able to meet these like scaling expectations for their business, unless that loan department really comes through and knocks the doors off of what was expected and what they actually did.
Something interesting for you guys to understand about this too SoFi was losing money all up through 2023, and 2024 was the first year where they reported a positive net income. So yeah, in terms of that too, just like I showed you guys, there was the accumulation pattern, and took them until when they started reporting positive income that we started to see this shoot up. Same idea with Palantir. Palantir was the same type of pattern, same type of result with their earnings. So I kind of agree with it. It's kind of run up quite strong. Definitely more of a, for example, here on the daily, we're pretty high up on our stochastic. So there's a very good possibility we might see it come back down toward this $20 range. If we see a blowout of earnings, it would break up above this, of course. But I'm definitely thinking that a big part of it's already priced in. Come back down, see it get snatched up, and if we see another big move up higher, then over time, I would definitely say by 2026, SoFi very likely could be over $25. But it doesn't have to happen this earnings. That's the thing. You got to understand it could take a little bit more time. Okay. Back to our Discord. Next name we've got for you guys, PayPal. Tuesday before open. If you take a look at this, I've posted this before. There's this thing called the market psychology chart, where it's a market cycle, and you see this huge euphoria run up to the top. So back in 2021, PayPal was valued at a bit over 300. Drop back down, had a bit of a dead cat bounce. This one actually came very, very close to breaking that all-time high, which leads into complacency. And a huge drop down, a redistribution portion, and then now back into the depths of despair. So we've seen anger, we've seen a bit of depression, a little bit of disbelief. So are we past that? Are we able to see, are they first off, are they accumulating? We see a lot of volume down below, especially once we come down to lower ends. So if we see a continued push up higher, we could see PayPal start to make a bit of recovery. This is my chart for it. We do have a bit of a Wyckoff accumulation pattern with our selling climax, automatic reaction, creating some ranges for us. But it's definitely struggled. It's definitely retested, secondary tests near the bottom, and a potential spring. It's hard to tell if we already saw the spring down here on the left side, or if we're actually aiming for the spring here on the right. This one took a little bit less time, and very possibly we could be seeing that last point of supply. There is a gap above around that 87 range. I'd say, let me pull up my actual chart for you guys. We see from 82 to 86, we see a gap over there. But the thing here is as well, Stacks has given us kind of mixed signals recently. There's a lot of puts being purchased, especially the last few prints that we see are aiming for March of 2026, aiming below 65 and 62. We do have this big money call aiming above 75. We are right next to 75 at this point, and that's aiming for the middle of next year, 2026. June 18th, 1.14 mil. That's really the one big money situation we've seen. A lot of these are actually fairly small comparatively, 200K, 200K here. So, in terms of an earnings position to be taking for something like this, I would want to see a lot more activity coming in before I would make a decision as to, what to expect. PayPal, I use PayPal. I think it's a great company in terms of what they do, but there's definitely been a lot of competition in the space. A lot more people are using other forms of payment and using other ways to transfer money. PayPal does take a pretty big chunk out of it whenever you do use them. So I understand that's where they make their money, but why would I use PayPal when I can use Zelle or when I can use Venmo? That's the big thing about it. They've been a great company over time, but we are in this market cycle. It's got to break up above that accumulation pattern for us to have some confidence in it. So do we see them scooping it up as we come back down every time we dip, or are we going to see it kind of just chop around in that area? I would even say it might take some time. If this company is to do well, right now we are getting back into, due to I've talked about this before, due to the debt spiral that we're in, the one way that the U.S. government's going to be able to get themselves out of this is to print money. That could cause these asset prices to expand and to go up higher, but we're going to have to, that's going to take some time for us to see. So will PayPal go higher? We'll have to see from there. Let's take a look as to what Max has to say for PayPal.
So it looks like we're looking at EPS at $1.30, 9.2% year over year. Estimated revenue at $8.1 billion, 2.7% year over year. Pretty mild, I think, for the industry they're in, if I'm being honest. But it's a good sign because they're positive, because I would expect potential downside because the sentiment is mixed. It's improving its margins, but to Eric's point, that growth is still very sluggish with them. You think of them as like a legacy company almost. They're like an IBM almost at this point, where like, yeah, they stay current, they stay relevant, they stay with the times, but at the end of the day, like your parents probably have PayPal stock. So some important things, it's trying to rebrand itself as just more than just a legacy checkout button. So I think to all of Eric's points earlier, them trying to make this shift from just being this thing where you could transfer money and providing all these other services is where they're trying to focus. And they have a new CEO, Alex Chris. The company's focused on efficiency, monetization, and AI-powered payments as well. But while they're trimming fat and boosting margins, user growth and top-line acceleration remain a problem here. Now, what are we going to watch in Q2? Again, that EPS growth, it's strong, but it's already priced in. PayPal's been crushing EPS estimates. They beat by 15% last quarter. A small beat here won't move the needle unless guidance has a pop too. Revenue growth, it's still soft here, as I mentioned earlier. That's not exactly a growth stock number here. Flat transaction volumes and sluggish user growth are the culprits, by the way, of this flat revenue growth that they're looking at. Total payment volumes, another thing. 434.5 billion is estimated, and that's a 4.2% gain on the year. Steady but not exciting. Markets want double digits for those year-over-year numbers typically. Transaction margins are at 46.7% estimated, and that's up because they were 45.8% this time last year, which is a positive sign. It shows Chris is delivering on margin expansion even if growth is lagging currently. Active accounts, we're looking at 438 million estimated, barely up from last year. Is this user fatigue? To Eric's point earlier, possibly, because we have Venmo, Cash App, Zelle, Chime. All of these banks offer ways to transfer money to people within the bank now, where you don't need to use a Zelle potentially. Like with Chime, they have MyPay. I can send Eric money right now through Chime MyPay, and he doesn't need to have a Chime account. It just goes to his phone number, he puts his debit card in, and then that money deposits to whatever debit card he wants to use. So these are things that we need to be aware of, especially with active users on a platform like this. Now, the revenue mix does matter here. Transaction revenue is at 7.31 billion estimated, and the value add services are at 767 million estimated. These extras are key to margin expansion. Think buy now, pay later, crypto rails, and merchant tools. Now, why does this matter? PayPal is cheap for a reason. Traders don't just want EPS beats, they want a new story. PayPal's multiple won't expand until the street sees proof of platform re-innovation. Turnaround play. CEO Alex Chris is talking big. AI integrations, better checkout, rebuilding Venmo. If any of that shows up in the numbers or guidance, we can expect some fireworks here. And then also a fintech war zone. Stripe is private for now. Apple Pay is eating away at the market share. Zelle and Square are gaining on peer-to-peer. PayPal needs to prove it still has relevance here as well. Now, the biggest risk with them is growth purgatory. PayPal's biggest problem isn't profit, it's the narrative. Investors want to believe PayPal is building a next-gen payment platform, but so far the metrics say it's just a leaner version of its old self at this point. There's no user growth, there's no standout product innovation, and they have flat total volume, which is flat excitement for investors. If Q2 comes in soft or management stays vague on guidance, the stock could drift again. So that is really what we're looking at here. Active users and growth and engagement, new monetization tools, Venmo recovery, and margin expansion are the top 4 things that you're going to look out on that guidance call as well. And those will be the catalysts that either send this thing to the moon, take it flat if everything comes in as expected, or if we come under, you can expect a pretty aggressive sell-off, because again, this isn't a sexy or exciting stock, let alone company right now that people are really looking into, let's say.
Yeah, and I was looking at stacks right here. If you look at insider trades, they've just, even their management's just been selling off the EVP, VP, CEO, president. There's just a bunch of sells going on through this past year, selling off at that $60 to $70 range, and recently $73, almost $74 back on the 14th of this month. Politician tracker as well shows a few sells recently, last 2 to 3 months, but these are fairly small overall. So, you know, overall, I would just say it's never a great sign if you see a bunch of insider sells from a company. That would probably, for me, lean me toward the bearish side in terms of this upcoming earnings.
Insider sells going into earnings is never a good sign either, because that means they could be expecting some turbulence from what these people are about to say on that guidance call.
Yeah.
Or for what they're going to give as guidance. That could be exit stage left for some capital preservation at that point.
Yep, I agree. All right, next one. This one's a big one that a lot of people have asked about. Boeing. We've got Boeing earnings Tuesday before open. I've got a chart over here that shows a bit of Wyckoff accumulation. And actually, this played out exactly from my prediction from last earnings, I would say. I drew this saying that we were going to head up toward the top end of this channel, this little range that we have in terms of Wyckoff. We'll very likely see a bounce off of that, so that might be a little bit of an omen for this upcoming earnings. We might still see the rest of this little gap being filled before that happens, but I do expect that we are in the final stages of accumulation, and we could see a bit higher for this in due time. But what will earnings show for us? Well, stacks prints show some puts taken out the last few days. Overall bullish in the long run, but earnings could create a short-term pullback after this run-up since April tariffs were announced. So if we look over at stacks, have a flood of calls being purchased and a few puts sprinkled in here and there, but the last few ones that we've seen are all puts, all aim, and the short-term one that we see over here, $560,000 for August 15th, the 240 puts. So aiming for, I would say, if anything, that might create a bit of a ceiling for us to see. Might peak up a little bit after earnings, but I don't see it going up past that 240 level. In terms of equities, not too much buying pressure in terms of the last 2 weeks, but we do have a bit of buying here and there sprinkled throughout for those last few months. Let's see what Max has to say for Boeing.
All right, so this is an interesting one because like everybody seems to be bullish about them with the orders and all these other, like the 737 orders that have come in over the last month and things like that. But we're looking at an EPS of down $1.47, which sounds insane, but that's also up 49% year over year at that point as well. Revenues at $21.86 billion, which is up 29.6%. And the key focus here is going to be delivery volumes, cash flow, and margin expansion. And let's go. So basically, the way this is getting set up, it's a long road back for Boeing. We're talking grounded fleets, regulatory scrutiny, and COVID shocks. Boeing is now back in delivery mode. 737s and 787s are finally ramping. Defense and space orders are stabilizing. Global services is profitable and growing. And Jim Cramer, Boeing's going to have a fantastic quarter. Oh, geez. So we might see a Boeing sell-off here. The question now, can Boeing translate backlog into real profit? So the key points for Q2 will be delivery rebound in full flight. Total deliveries, we're looking at 130 versus 120 last year. 94 for 737s, up from 70. 787s, we're seeing 20, more than double year over year. These deliveries are basically their top line strength. The segment highlights here: commercial airplanes, 9.95 billion, 65% up. Defense, space, and security, 6.4 billion, that's 6.3% up. And global services, we're looking at 5.16 billion, 5% up. Global services doesn't sound impressive, but mind you, that just became profitable, meaning like they just stopped losing money in that division. But defense, space, and security, that is a little bit of a, like, you typically want to see like a 10% year over year like number, anything that's over 10%. So that could be a clip in their heel. We'll have to wait and see. Services is expected to deliver 942 million in operating profit, a margin monster in the Boeing portfolio. Cash flow plus margins, as we just mentioned, EPS may still be negative, but free cash flow matters more right now. Investors want to see a path to sustainable profitability. Now, why does this matter to the market? Well, they have a massive backlog. Boeing can't build fast enough, and supply chains are tightening, but demand isn't slowing down, so that's a good sign for them. Aviation recovery play. Boeing is the industrial proxy for global travel. If BA is booming, so is the demand for that travel. Which, by the way, that might not be good because I'm pretty sure every airline just got kicked in the balls last week. American Airlines, Love, most notably. Defense optionality, rising global tensions mean defense and security arms are increasingly valuable. Industrial bellwether, again, BA is the heartbeat of U.S. aerospace. This report will ripple across the Dow and beyond here. Now, what are some of the risks? Well, EPS is still in the red. Wall Street wants to see that reverse here soon. Execution issues. Any slip in the 737 and 787 deliveries could spook investors. Backlog not equaling profits. Because that's usually a big question for companies that have a backlog, is like, can you take that backlog and turn it into money? Because eventually those people are either going to go elsewhere to get what they need or cancel their orders. So you got to look out for that. Ramping production without margin can backfire. Regulatory, quality control, and geopolitical risks are still lingering. If it's not Boeing, it's United Healthcare. One of those two companies is constantly causing problems or getting investigated for some shady thing. So it's just, don't be shocked if like a day before Boeing earnings, you hear about how some 737 fell out of the sky or some engine didn't pass or they're cutting corners somewhere. So really what to watch for in guidance: updated delivery targets, margins, and FCF guidance. Defense plus international contract momentum, supply chain visibility. Is there any signs of easing there? And demand trends from Asia and the Middle East. Because those are their two biggest orders. I think like China was the most recent one. They ordered like 27 87s, I think, or something like that. So yeah, we'll have to just wait and see. Again, if you guys followed any of the airline earnings reports, they did not go well at all. They missed pretty much everything on guidance by like an atrocious amount. And some of the risks that they've been taking to rebrand and reinvigorate the brand, let's call it, fell flat on their face. So I'm mixed on Boeing because I feel like they could beat because of the supply stuff, but also because people aren't traveling. how much longer is that like supply actually going to last? And again, that backlog is just terrifying. So anything with a backlog is like you're just gambling on black or red at the roulette table at that point.
But I mean, we can consider the fact that that backlog is already priced in, and it's probably led to this run up so far. The thing I would probably say is it's possible they're going to beat on their EPS and revenue, but I don't see how forward guidance could be that great. I mean, they're going to really have to give some good guidance for what's coming up in terms of their plan to deal with that backlog, and in terms of what all this, in terms of the slowdowns that we're seeing with airlines. They got to spin that in a very positive light for this to head up further at this point. So I would say earnings very likely could be one of those ones where we see it green or a double beat even possibly, but we might see a sell-off because a big part of it's already been priced in for what we see. And that would go exactly according to the thesis that I have with the chart as well. We might see a little bit more of that gap fill, but then very likely a sell-off before it heads up further later in the year.
That would have to mean their supply chain isn't easing then at that point, I think.
Yeah.
Which is going to be, I think that if now that I'm like considering all the factors, I would say like supply chain easing might be a bigger factor than what we're giving it credit for, because that could solve a lot of their issues, because again, that backlog is just so bad because, well, they can't build fast enough because they have supply chain constraints. Yeah. So it's just like, it's kind of like, okay, we can build 20 planes a year. Well, we're going to order 200. Great. We'll have those to you in 10 years. That means for the next 10 years, we know that they'll deliver 20 planes each year, right? So as an investor, you're like, okay, so I'm just like I'm on a flat line for the next decade. Like, that's insane, right?
Yeah.
Unless supply chain gets eased up and they go, okay, great. Now we can make, with supply chain easing, we can do 40 planes next year. Then that's where investors get excited. That's when the spice has entered the chat. That's when the mayonnaise has been taken off the sandwich. Like things are going to get interesting here. So I definitely agree with that. But now that I'm thinking about it, I feel like that supply chain is going to be the catalyst or the dynamite stick that either blows this up or blows it into the floor.
Yeah, like we've said, for this earnings report, this time around is a lot of where the tariff news has finally been priced in. I could definitely see that being another headwind that would limit the EPS and the revenue for Boeing if they are being subjected to a lot of those tariffs as well. So definitely would say probably, I love what Stacks is saying in terms of the bullishness, but I think earnings, especially because they do report Tuesday, keep an eye out. A lot of these ones that are reporting Tuesday, keep an eye out on Stacks and see what comes in. What would really pique my interest is if you see one of those unusual and big money prints come in for extremely short term. So if we're aiming for end of next week, or anything that's 8/1, 8/8, or 8/15, any of those prints that they're spending over $1 million on, and if it comes in with that blue line as well for Stacks, those are the ones I would say are worthwhile to look at for earnings plays, and very likely somebody is in the know for it and is expecting a bigger move that you might want to be a part of. So keep that in mind. All right, another big one, UPS, Tuesday before open. Generally, they beat earnings. They have a huge line of just green beats. A few misses here and there from time to time. Got a bit of that market cycle look to it, but it's too early to tell if we've seen a real selling climax and we're getting into Wyckoff accumulation just yet. Stacks does have a March 2026 105 put for $542,000 taken out on Friday, but there's not much else recently. Overall, still bearish, but I can't imagine that this name will bleed out too much longer if so. Their PE is at 14.96, so keep that in. That's pretty low in terms of some of these bigger names. We usually do see closer to 20 when it comes down to a PE ratio, and especially during times of euphoria, we can see those PE ratios go up much, much more. For example, we were talking about last week with Tesla, which by the way, we were on point about. Tesla has a PE ratio of 180. And we saw a big sell-off just due to, they had a very poor earnings report. But we use the example that depending on how much you make per year, a PE ratio is a price to earnings ratio, meaning how much is this stock price compared to how much revenue and how much your earnings are reporting per year. 180 is 180 times that earnings. In this situation, UPS being at about 15 is considered a fair and actually quite a undervalued stock at this point. The main headwind that I imagine here is the tariffs with UPS. Did we see people slow down their buying? Do we see that impact their bottom line? And is it going to make an impact on that earnings for this quarter? So as you guys can see in the chart, we're just in this downward channel. We've peaked out underneath it, but made our way back into the channel, which is a good sign. We did fill this big gap from this pop back in 2020. So, there is a possibility we could see this head back up to the upside. Overall, we do see a bit of this, this sell-off, and it's taking that chop down toward the bottom in terms of this market cycle chart that we see. From what Stack sees, this is everything. It shows all the sells as well, but if I filter just for the buys, you'll see how it really limits what's going on. There's really just 2 prints over the course of this last month. So if you're bullish, this one for September 19th, 105 calls, but keep in mind they only spent 90K on that. If this is a large institution doing that, that's just probably going to be a hedge in terms of things. And then in terms of the puts, the 542 is what really sticks out. That alongside with this April unusual print that we see for March, $70 strike, 120K, which is fairly small too, but that one's probably hurting right now because it's run up another $10 from that position. So equity, little sprinkle of buying here and there, but nothing that makes me say, oh my God, they're buying and they're trying to get as much of this as they possibly can. So what does Max have to say about UPS?
This one's interesting. They're divorcing Amazon.
Okay.
So estimated EPS here, we're looking at $1.38, down 8% year over year. Not great. Revenue, we're expecting $22.1 billion, and that's down 3.5% year over year. It's bearish, but this also may be bottomed out at this point. So that's one thing to consider during this report. They've dropped 50% since its peak in April, or not April, its peak in 2021, and it is now flirting with pre-COVID price levels. Wall Street's already priced in doom and gloom here, but zoom in and the story's changing. Operating margins are stabilizing, revenue per package is rising, and the Amazon breakup, it's long-term bullish. With earnings approaching, the big question is whether UPS has finally delivered a leaner model or if more pain is going to lie ahead. Now, what are we watching in Q2? Margin reset in motion. UPS is deep into a $3.5 billion cost-cutting campaign. That includes closing 73 facilities and slashing 20,000 jobs. In Q1, U.S. operating margins climbed to 7%, a 110 basis point year-over-year boost, even with volume being down. The translation, UPS is charging more per package and doing it more efficiently here. Now with the Amazon divorce, it sounds ugly in the beginning, but like divorce, some good always comes out of it. UPS is phasing out half of its Amazon business by 2026. That's a big hit. Amazon was 12% of its revenue back in 2024, but here's the kicker, it wasn't profitable. As CEO Carol Tomé put it, Amazon is our biggest customer, but not our most profitable. UPS is trading revenue for margin, and Wall Street might just respect that if Q2 shows continued strength without Bezos boxes. And we also have the dividend dilemma. UPS has a sky-high 6.6% dividend yield, and that's not bullish. It's the market saying, we don't think you can afford this. UPS is shelling out $5.5 billion in dividends this year against $5.7 billion in expected free cash flow. That's a $2 million margin right there, which is like United Healthcare dancing on the DOJ case right now thin. So a cut would sting, but it might reset investors' expectations of what they should want. More cash equals more automation, which leads to better tech and long-term margin fuel. So really, if they can reset their margins, it can essentially allow them to innovate and then increase those margins again. And also resetting the margins can attract more investors to get in it as well. So that's another thing to keep in mind here. Now, why do we care about this? Well, macro pressures for one. Slower e-commerce growth, rising labor costs, and global trade uncertainty are not going anywhere. There's also cash flow stability. UPS still prints FCF like a boss, but its capital allocation strategy is under fire. Re-rating opportunity. At 14.5x earnings, UPS trades at a steep discount. Any whiff of stabilization, look for an upside surprise here. Basically, Wall Street has thrown UPS in the penalty box. That's exactly when turnarounds begin to start, though. However, like everything, there are some risks that we need to be aware of. And those risks between labor tensions, declining volumes, and possible dividend haircut, the next few quarters won't be smooth. But UPS isn't going bankrupt. It's optimizing. And if that shows up in margins and guidance, the stock could reroute higher in a hurry. Now, what's to watch are 4 points: domestic margin strength, updates on facility closures and headcount, CapEx plans, especially automation, and any hint on dividend policy. This will move the stock, most likely, by the way. Their dividend is going to be what dividends are to UPS is what the supply chain is to Boeing. So that's really how you can look at this. If they can figure out this dividend policy, yes, then I see a lot of upward mobility. But if they don't really give any insight or hints or plans or anything about it, then yes, we could potentially see some more bottoming out. But again, Wall Street does think this could be the bottom for UPS before this turnaround at this point.
Yeah, I like that. The breakup with Amazon definitely seems troublesome, but if you really look closely, it sounds as if that was really affecting their bottom line, and cutting it out can actually help them really optimize for better profits and for them to look elsewhere. I do remember as well too, if you guys don't know, Amazon's got a huge contract with USPS. So you see the United States Postal Service delivering for your Amazon packages. And there were so many packages at one point that they were actually forcing their workers to work on Sunday, which again, there's supposed to be no post on Sundays. But especially here, like for me in San Diego, you'll see USPS delivering on Sundays because they took on that contract and there's just so much that they needed to do. And that was gonna, at the end of the day, because it's a government nonprofit type of thing, you end up in a situation where that's just being absorbed by taxpayers. But Amazon can be a little bit of a bully when it comes down to that type of thing. But if you take a look out, Amazon right now, I'm seeing more and more of those trucks around my area at least. And I'm not necessarily seeing USPS or other companies and UPS. I don't see them delivering for them as much. It's really just the contractors that they've got doing that for them now. So that definitely, UPS here could be looking at a pop back up in due time. Will this be the earnings report that it doesn't? I will also point out too, we had a lot of this consolidation back between 2018 and 2022 or 2020. So 2018 and 2020. And right here, we're right above where all that is. A lot of volume got snatched up right there. So if we're able to stay above that, right above $100, I would say, we could see UPS headed back up from there. All right, next. Yeah, go ahead. Anything?
I was going to say, I used to be a mailman, by the way, and those Sundays sucked. Like, and the worst part is you don't even sign up for them, you get assigned. So like each week your manager randomly chooses 12 people or however many people from your office to go, and you're just hoping you don't get picked, and it's god awful. And yeah, but Amazon, part of the reason why you're seeing more trucks too is they did that deal with Rivian. So Rivian's now doing a lot of their fleet production, if not all their fleet production, and that's why you see the bubble looking cars now as well. So yeah, I mean, I think UPS will be fine. If it wasn't a profitable customer, then that's
Yeah.
no
I
real
mean
skin off their
that
back other
six
than
percent
volume.
that 6% dividend is huge. So I mean that very well. I mean if they have to cut it for the long run, I understand. But I'm sure also cutting into, how Amazon was messing them up. That definitely is going to help out. So we'll see how their guidance reports on Tuesday, and we'll discuss that a little bit further from there. I've noticed today we've got a much more intimate group. I understand it's Sunday. There's a lot fewer people that are available right now. They're probably out and about with family. But if you guys are here, just like Jenny did right here, go ahead and comment stacks for us so that we know you're around. And let us know if there's anything in particular you're here to hear about. Any earnings. I know that the earnings for Apple and Amazon and Microsoft and Meta are coming later in the week. We're going to try to touch upon those and get a little preliminary idea of them today near the end. As we get to the rest of these that are reporting on Tuesday, we do have a few more left, and then we'll make sure that we get you guys some information on those ones too. But like I said, give us a stacks in the chat. If you are watching as well, hit the thumbs up button so that we get that like, so we could play the algorithm a little bit better here. Happy to do this on a Sunday for you guys, get you guys ready for this upcoming week.
I was gonna say we should just do a earnings. We should do a closing bell show tomorrow because then one we'll have some fresher data for Wednesday and Thursday earnings. Because I couldn't even find real preliminary reports for in terms of like what people are expecting, and they're too varying for me to like put something that's concise and well put together. But I know most of those articles are going to hit like Monday morning. And I still have a bunch of like previews that I'm doing for Tuesday after close, like Visa, Starbucks, Teradyne are like the next three that I have that I'm gonna do because I stopped at Spotify pretty much.
Yeah, that's fine.
So
I think
yeah.
we'll discuss it tomorrow. There's only really waste management after hours. A lot of stuff is happening Tuesday. I know for us, we probably want to do a Tuesday closing bell show, but that is
Whatever
that is
works.
probably going to cut it close for. I mean, Wednesday for Meta, Microsoft, those are all after close on Wednesday. So we'll Max and I will be in touch about that. We'll take a look at what Stack says and see if we can get some additional information. Maybe we'll do a short Monday one and then get back to it on Tuesday too. But we'll probably do a few extra ones, few bonus closing bells for you guys this week, since it's such a crazy week in terms of earnings. It's probably one of the biggest weeks of this quarter.
Yeah.
Okay.
Yeah, that's why I want to make sure I have accurate articles because some of these are going to be hairy. Like Apple, I know is going to be hairy. Coinbase definitely.
I think MicroStrategies, MicroStrategy and
anything in crypto is going to be
yeah,
hairy.
we
I know
also
for
got
sure.
Mara coming up. I've got a couple more here, but Spotify, Merck, PG, Visa, and Mara. I've also got Starbucks and STX ready for us as well, and then we'll jump into those bigger names to get an idea of. But yeah, on Friday and yesterday, I was trying to get as many of these out for you guys so that we can, discuss them and get them ready for the week. Spotify. Talked about this before. Spotify going through accumulation, distribution, accumulation, reaccumulation, more reaccumulation. We're much higher than we were before. I remember thinking, and this distribution I was talking to Max about, this was back when Joe Rogan was the main headliner for Spotify, and he ended up leaving from the platform, and we saw a huge distribution move to lower ends. But if you got into Spotify near the bottoms, right here, it says went as low as about $69. Right now it's at $693. That's a 10xer, even a little bit more from the bottom at this point. So you guys can see how Wyckoff accumulation is a true pattern that if you guys understand and you can spot when they're really buying up, you guys can get in on these positions and make the money from the upward trend. What are we looking at? So reaccumulation, we've got this flag looking pattern. Is it a bull flag? Do we have a possibility of it shooting back up? The last 3 earnings were all misses, but as you can see, they do not necessarily mean that price is going to go down. So here in November of 2024, we saw a miss, but we actually saw it break up above the channel. Same with the one in January of this year, February of this year, we saw it pop up above, came back down. And here as well in May of this year, we saw, even though we saw a poor earnings report, it dropped and then recovered pretty quickly in just a couple of days. So remember, earnings does not have to dictate what direction price is going to go. A lot of times it's going to have to come down to what their forward guidance has to say. Tuesday before open, the PE ratio at 112.32. So we've got a very, very highly valued stock. A lot of times with this type of thing, it's because of their forward guidance, but it is definitely in the severely overvalued range when it comes to price to earnings. Already just showed you accumulation, distribution, accumulation, and 2 reaccumulations. We haven't exactly seen a buying climax. So is it possible that we could see higher? I do believe so. We do. And a lot of times with those sell-offs, we will see it accompanied with some sort of news. So maybe we'll see a pop and then a big sell-off that creates a selling climax and an automatic reaction, which creates a range for the price to trade out in. I would expect at this point too, we would very likely see some sort of distribution start to happen, especially because we are this high up on price. Oppenheimer just upgraded on Friday to an $800 target. Okay, so it's trading at about $690, another $110 higher. Which definitely would make that PE ratio just go up even higher. But keep in mind that part of it does not have to make sense right away, but in due time, it definitely will come back out and even itself out. Like I said, missed earnings the last 3 times, but popped higher on 2 of them and rallied higher on that last one. Stacks does show 2 unusual prints, one from 6.6 and the other from 7.22, both aiming above 800, okay? And they're aiming for January of 2026 and March of 2026 with a total of 3.87 million spent on those 2 positions. There were some puts also sold today at 677, which may create a bit of a floor for us. Seems like big money has longer term expectations on this name to the upside. If subscriber growth continues to beat expectations, we would definitely see back above 708 very quickly. We got to check stack sentiment on Monday for additional prints. And so you guys can see Spotify, not all that much going on stacks, but again, the 2 unusual ones are big money here. So you can see the big money bags in the background, but the blue lines are always going to be a situation of unusualness. Okay, so it's the way we like to characterize it is it's aggressiveness. This is a very aggressive position for them to be taking with high expectations in this situation for these calls to go to the upside. So honestly though, because Spotify is trading at that almost $700 level, a lot of these options are going to be fairly expensive. As tempting as it might be that, hey, we might be seeing higher for Spotify, I plead with you, don't aim for extreme out the money short-term expirations, because those are most likely going to get IV crushed because we will not see it head in the money. So be careful with that. Just because you see a cheap option play generally means it's cheap for a reason. Okay, you want quality in this situation for a name like this. And with these positions, yeah, I definitely think Spotify could very well be poised to head a little bit higher after this earnings report. But we do have quite a bit of a run-up, so a sell-off, if they do have some sort of miss, is going to be a situation that I would definitely expect. But above 700, if we can get that beat, otherwise we're going to probably see it head back toward that 670 range. 677 is what this put is saying for Friday. Let's see what Max has to say about Spotify.
All right, so Spotify is an interesting one. Revenue, we're expecting $5 billion, 21% up on the year. EPS at 232, 61% year over year. Premium subs, 288 million. That's up 41% year over year. And monthly active users, we're looking at 736 million, which is up 51%. So with those year over year numbers, we can definitely see why this thing is trading at the PE ratio it has. Now, there is more to this than just revenue, monetization risks, and ad strategy, why investors are laser focused on margins, analyst upgrades, but bearish earning models, and whether spot is still a buy at 680 plus. Because as Eric said, valuation sky high, and that is a dangerous world to live in. So it looks like it's still riding the wave after hitting a record high of 785 in June. Even after a post-hype dip, it's up 100% on the year. Bulls are betting big on monetizing free users, AI-driven discovery tools, and new features like Superfan tier. But bears are circling too, citing a high PE, a mixed earnings beat history, and tougher competition from Apple Music and Amazon Prime. So the question heading into Tuesday, can Spot keep the growth party going? So what are we going to be watching? 3 things. User growth. That is still their hero, their bread and butter. 736 million monthly active users, again, 51%. Premium subs, 288. Ad-supported growth is massive at 58% year over year estimated. Monetization is the wild card, though. Analysts are watching whether Spot can increase ad revenue per user. New Superfan tier and pricing tweaks could be teased in guidance. We're also seeing AI-enhanced personalization, which is going to give them a potential long-term edge here. AI DJ, AI playlist curation, and Gen AI tools have driven retention. The key question, though, can Spotify monetize the engagement bump? Now, why does this matter? Spotify is trying to become the audio platform for the next decade here, and this report could set the tone for the rest of 2025. It's also the most richly valued of all major music streamers. Any misstep on margins, FX headwinds, or ad revenue could trigger a correction here. Analysts at KeyBank and Oppenheimer, as Eric mentioned, both upgraded the stock ahead of its earnings as well. But Zach sees a risk, which Zach's ranking is like this earnings thing that I read all the time, by the way, for context. They see a risk of a miss of ESP down 9.1%. So that's not a great sign. But again, it seems like one of the themes we're going to be seeing too far, too fast. Like some of these companies are just aggressively growing too fast in such a short amount of time that it's going to make people nervous. We just talked about that with SoFi. Again, Spotify is trading at an insane PE ratio ahead of earnings, while competitors like Apple and Amazon treat music as a loss leader. If Spot misses Tuesday or guides light, this hot streak could hit pause fast. Now, 4 things we're going to be watching: AI monetization roadmap, subscription price strategy, expansion into Asian and LATAM, and margin trajectory post Q2. Those are really the only things that are going to boil down for Spotify, because they may be looking profitable, but if those margins do not play out for their Q2 projections, then it's not, that will be their killer probably. So, but yeah, that's what we got for Spotify.
Yeah, very good. Yeah, like I said, risk is more so to the downside on this one. If we see a major subscription beat, that could be what pushes it up. I kind of like to think about how Netflix as well. Netflix kept on showing a lot of beats in terms of their subscriber base, which has pushed them up very high. But again, it's gone up very, very quickly in a very short time. So again, the risk is going to be to the downside. Keep an eye out for what shows up in stacks on Monday and just Monday, because it is Tuesday before open. See if there's anything else that shows up, especially because on this name we don't see too much activity. But if they are going to be willing to spend those millions of dollars on these positions, keep in mind they're not trying to lose their money, so understand that. Next one, Merck, MRK. Tuesday before open, PE ratio 12.25. Fairly undervalued, breaking out from a downward trend, but is it enough for a reversal? We did see a Stacks AI print at the end of May for September 19th, $90 calls. Those already up from $1.40 up toward about $2 and actually a little bit higher than that. OI is still at 29,000 for that specific option print, so there's still a good chance that they're still in. did they time the bottom? That's a good question. Our dark pool equity blocks came in on the 7th at $80.90. There's a total of $91 million 5 times trading right under, and they're trading right under 95 or 85 right now. So they're already up $5, almost $5 per share. Calls for the 15th of next month came in today, which was Friday when I wrote this, aiming for over 90 with a little over $504,000 spent. Earnings tends to be a beat, but the question is how much of that is priced in. Leaning bullish on this name, and a lot of that has to do with what Stacks has to say. So we see this run up, we are above this lower trend line, and we came right back down and bounced right off of it. We do have a little bit of chop. When it broke out of this is when you can expect that we saw those Stacks prints. And do we have some more upside to be had up toward 90 and 94 are where my resistance ranges are drawn for that. Now, Stacks. We see on these all the buys. The one down here on the lower end is in that blue. That's our Stacks AI print, 1.39 mil being spent. But what really interested me here is on the 7th on the right side. 1:04 p.m., meaning right after close. Keep in mind I'm on the West Coast, so the markets close at 1 o'clock here. MRK for $80.09, and here 91.04, 91.05, 91.05, 91.05. So we got 5 of these, right? So they're spending what, 450 mil on this name, and it's up like $5 from that, right? It's trading at about 84.99 is when this last print came in. So that just shows that they have a heavy interest in accumulating for this name. And especially when you take a look at how it's dropped all the way down here, this is a great area, especially with these volume spikes. So let me make sure you guys can see that. Scoot us to the left. On the right over here, you see these volume spikes near the bottom, meaning that big money has taken an interest in purchasing this name. So I definitely do think that this is one of the names I would lean a little bit more bullish on. Also because when we see Stacks AI come in, that Stacks AI print is already in the profits, but a lot of times we do see our Stacks AI prints end up over 100% return. So that is something to consider. Above 90 is kind of what I would aim for, and keep in mind too, a lot of what we see in terms of these are all aiming for a little bit more time. So I would say you don't have to get the August 15 ones. Yes, they're kind of cheap for the $90 strike, but I would probably say September or even October might be worthwhile to look at, and just spend a little bit more on your premium for a little bit more safety in those situations. In addition to, this is just the Webull image that I have here down on here that shows, can you guys see it? Let me move us again to the top. This is for MRK, $90 for September 19th. You can see here our open interest is 29,000 with a volume of 1,000. So that just shows that there's still a lot of people holding onto that Stacks AI position that we showed you guys. You got anything for us, Max? I know you didn't post anything on it just yet.
No, I didn't. I don't. So I think the only other one that I found anything interesting about was Starbucks.
Okay.
Outside of that, the rest of these are kind of muted in terms of like what the expectations are, but it's also because like historically they're more EPS and revenue driven than they are guidance driven.
Okay.
So I don't, yeah, I think Starbucks is the last one I'll have for today for the most part.
Okay. What I've got for you though too as well, MRK shows a PE ratio of 12.25, which is pretty low as well. Market capitalization $212 billion. And another thing too, their quarterly net margin it's kind of been on the upward trend. We saw in Q3 of 2024 at 18, almost 19%, but as of right now, their net margin's a little higher at 32.52%, which is amazing. So over the last few years, this is some of the highest net margin that you can see from them. And again, 2025 seems like if they can continue that upward trend, I can definitely see it getting snatched up at these levels and head up 90, 95, maybe 100 in due time. All right, let's go over the last few ones. I also had, before we go into Starbucks though, I had a few little ones to go over here. We've got PG, Procter & Gamble. Tuesday before open, only one earnings miss since July 2017, so I expect this name to beat. Question is it already baked into the current price? Strong upward trend close to lower bound, bounced off of in 2020 and 2022. Stack shows a big money print from 610 for August 15th, 170 calls, $1.82 million spent. Dark pools show nearly $1 billion of equity bought recently at the end of last month and beginning of this month. So we do have this pretty nice channel that we've gone up. We've peaked up above it a few times. The thing here, though, is this pattern that we're seeing near the highs could be a little bit of a distribution pattern, was what I was looking at. In terms of the big money, though, I wanted to make sure you guys see $439 million spent here, 321 million and 226 mil, all just coming in at the end of last month and beginning of this month. So they're definitely accumulating and purchasing this. 160 was the spot price at which it was trading around, and it's down back toward 152. So could it be headed up further? I would actually say if this is a reaccumulation pattern, we've seen a little bit of a spring, a drop down to these lower ends. We could see it head up further toward that 160 range, 161 range. If we see a miss on earnings or some poor guidance, I would expect it to come back down toward 155 and eventually back toward 151. So we'll see. This one is definitely a name that I think in due time will be headed up further. What earnings does obviously can be a bit of a coin flip at times. But with them purchasing nearly $1 billion in shares, I would definitely say I would lean a little bit more bullish, at least for the long run.
Well, I know the big thing with them, when I did do my research, is the dividend. Like, they're kind of the northern star of dividends, basically. So, like, that's really, like, their big... That was, like, the big news story. Other than that, it was just a bunch of breakdowns of all the revenue they're expecting from all the different sources that they have right now. All of them are pretty much expected to be up anywhere from 5% year over year up to, I think, 31% year over year was the highest I saw. So, but the dividends was like the one thing I did see about them where I was like, that's a little interesting, but I think I don't know how. They didn't really explain how that's going to play into their earnings. It was just talking about why it was like the northern star of the Dow, basically.
Okay. I mean, if you go look in your bathroom, I'm sure you've got some Procter & Gamble,
Oh,
products.
yeah, like Tide and like that kind of stuff.
Yep.
Like they own a bunch of stuff. I know that,
Yeah,
but it's just
they own
like
a lot of things. And I want to also use this as a comparison to what we were talking about with UPS. UPS is giving a dividend about 6.6% was what it said. Look at this over here. PG, being the northern star, is only a 2.67% dividend. So that is already pretty solid because it's consistent money that they're going to be siphoning off to their shareholders. PE ratio at about 25, and overall their company has a solid net margin, around 17 to 18% pretty consistently annually. And on a quarterly basis, it's popped up above 20% in Q2 of 2025 and Q3 as right now, 19% or so. So we'll see how they report. But I definitely would say one of those names for longer term. They're always going to continue to make money. People are always going to need their products. But right now, with them spending that much money on it, I would definitely say long term, I would lean bullish on this name. Head back into, I think I got one or two more left, and then we'll get it get a little preview of our bigger names in a moment too. So next one, Visa. I got Visa and Mara. Those are the last two ones that I have written up for today. Visa Tuesday after close, PE ratio at 36. Majority earnings beats, so I'm sure that's already priced in. Close to their all-time high, 375.51, with volume spikes at its April and June low. So it definitely got snatched up. Two most recent stacks prints are puts, both aiming for 2026. It's all going to come down to forward guidance of consumer sentiment, which has definitely begun to slow, with airlines earnings reports reflecting that. AXP, which is American Express, reported last week and ended up pulling back even with an earnings beat. Are we going to see the same for Visa? So as you can see on our chart, we've got this big run up overall. We are peaking up above that trend line, but will we hold, or are we going to head back down toward and back into this uptrend? Stacks shows big money puts, a little bit of big money calls a little bit earlier in this year, but the most recent ones are puts. In terms of equity, we do have some buying. We see 200 mil, 200 mil, 600 mil. So another $1 billion of equity being purchased in terms of this name. So Visa, a lot of people use their credit cards. Could be a boost in terms of consumers, where consumers are now relying upon credit cards a little bit more. But we got to keep an eye out for percentage of defaults and things like that. I would definitely say most recent quarter, especially with tariffs now making their full impact, consumer sentiment is definitely down. Could it still mean good news for something like a credit card company like Visa? It could, but it also, I will say, comes very much down to that forward guidance. Are they going to be able to, spin it in a positive manner of, consumers are maybe hurting, but a lot of them maybe are turning to credit cards in order to, maintain lifestyle and maintain their money spending. But overall, I would say just like American Express might see a double beat with earnings, but we might see a pullback afterwards, especially with stacks showing those puts coming in. You got anything
Had
for
a
us?
EPS. Yeah, they revised their EPS up 0.1% in the last 30 days. So I mean, it's not like significant, but it shows that investors reassessed their initial reading, which is always a good sign if they need to go back and take. I mean, it's a good sign if you get a positive raise, but if they were like, we had to drop it 2%, that is a huge red flag. But 286 for EPS, 18.2%. Revenues are expected at 9.87 billion, up 10% year over year as well. Service revenues are reaching 4.29 billion. That's 8.2% up. We have data processing revenues, 5.5 billion, 12.15%. So it's all going to boil down to user growth and then revenue, and MasterCard kind of being the thorn in their side for a little bit. Because right now the big debate is Visa or MasterCard, which is better. And that's kind of where people are at with it. But yeah, I think Visa, it has a good chance to beat. I always like EPS revisions that are positive because it shows that investors have a little more confidence going into that earnings report potentially. Because 0.1%, you have to remember, these people are trading millions of dollars, so 0.1% is a pretty big boost for someone like that. So yeah, that's kind of what I saw with Visa. I didn't really see any breaking news stories or like data breaches or anything that I think is going to affect partnerships or any factors that really could affect this earnings from a news standpoint. But we may see something come out this week because a lot of times these companies will make announcements the day before, 5 minutes after market closes of exciting news that could actually propel the stock into an upward or downward direction for that matter.
Yep, very good. Last one I have written up here is Mara, Marathon Digital earning. They've got their earnings Tuesday after close. This name ran up along with Bitcoin hitting new recent all-time highs, but sold off about 20% since. Mara operates large-scale data centers primarily focused on mining Bitcoin. Expectations of negative 49 cents per share, but there's an 57% increase in revenue from last quarter. Double beat mean we could see back above $20 a share, but a miss could drop it back down between 14 to 16. So, you guys are used to seeing my charts here. We've got a very large distribution pattern with a huge peak up above at about almost $85, and then a drop all the way down, almost 90 to 95% down toward the lows, back under $5. Now we're in this pattern. It could kind of look like a bit of a bull flag in terms of it, but we've just been chopping back around. We saw this run up over here in terms of Bitcoin and the new all-time highs for Bitcoin, and we've just seen the drop back down since. What was interesting though too is we did have quite a few unusual prints come in very recently. I don't think they panned out as well. They were aiming, I think, for end of last week, and then some of these aiming for the 1st of August, where they're aiming for above 19.5 and above 21.5. Right now it's trading around $17. So Marathon, it is related to Bitcoin, but it's one of the ones that moves a little bit more poorly compared to other Bitcoin names such as MicroStrategy and things like that. But I would definitely say with that sell-off, and we'll have to keep an eye on it on Monday. We've got a lot of these calls coming in that are very short term, so I do think that we might see a bit of a pop for this name when it comes down to after earnings. Anything you got to say?
There are things that make me nervous.
Okay.
Their EPS is a 49-cent loss, which is a 104%, like negative 104% change year over year.
Okay.
So that makes me a little nervous. Revenues are expected, however, to be at 220.24 million, and that's up 51% year over year. So it kind of balances it out in a sense, because now they might be only down 54% year over year combined. Now, one thing I don't like is over the last 4 quarters, the company has beaten consensus EPS estimates one time, which is not a great indicator, especially because it would be one thing if it was Bitcoin just started taking off. It's no, Bitcoin has been taking off for about, let's say, the last 18 months, right? Mara has had very minimal reaction compared to the MicroStrategies and these other companies that are a little more involved. So I guess the one thing I've never been able to figure out with Mara is why? Why don't you move the way your friends do? Because I mean, I get it. They're not. If you're
I have a theory about this, and I was thinking about it.
Mm-hmm.
Was their main business model is mining Bitcoin, okay? And yes, Bitcoin is going up in value, but that just means their company is worth a little more. It's not reflected upon their bottom line, right? They're spending money on energy, on infrastructure, on making sure they've got the rigs and the data processing power in order to mine Bitcoin. And they have a lot of Bitcoin. And as Bitcoin hits all-time highs, what separates it from MicroStrategy? MicroStrategy is actually purchasing it, and it's reflected in terms of their value of their company's gone up because now it's a profit margin that they're getting. And while Mara at this point they have that Bitcoin, it's not revenue until they go and sell it, right? So that's one of the issues with it is, yes, they might be worth more. They've got, I saw something where they are one of the top 5 holdings of Bitcoin, which is great, but their bottom line tends to struggle because you are spending a lot of money on making sure you maintain your infrastructure and to maintain the amount of energy that you need to use to mine that. So, they don't really make money otherwise. right? It's just based upon the value of Bitcoin coming in and how they, they get a fraction of it for using, their data and their power. So I think that's kind of the flaw within their strategy. Now, obviously, I only know so much about Bitcoin and this stuff. So if I'm wrong here, please let me know. That's just my theory on it. It's not fully reflected on that bottom line, and it's pretty much saying you have all these computers running at all times, and your energy bill is super duper high, and that's what's leading into these negative EPSs, right?
Well, one thing I've seen here that's kind of interesting is their ESP right now is at plus 55%, which just represents most analysts are expecting an EPS beat for this quarter. So that could be a thing. I don't know. I think maybe we could see a run up, because I will say, if you look at like the last 2 months, there's like an obscene amount of unusual Mara calls that have come in between June and July. And I've tailed some of them, and I made money on some of them. But granted, some of them were like literal 2-hour flashes in the pans, because if you didn't sell within that 2-hour window, those things went to 0.01 real quick.
And I'm thinking that EPS is already baked in, especially with this sell-off. It is kind of in this pattern where it could bounce off that lower end of this channel. So that's what I've got to say. But yeah, I mean, if you take a look at their quarterly income statement, Q1 was a negative 249% margin. Their revenue was $213 million, and their net income was a negative 533. So, there's some issues with it at the end of the day, and a lot of people complain about how this doesn't move that well compared to MicroStrategy and Bitcoin, but it's supposed to be a Bitcoin name. But a lot of it just has to do with the fact that as a company they struggle, right? They're not actually making good money. Okay. Two last ones for Tuesday I wanted to go over are Starbucks and STX. We'll just look at Starbucks. Starbucks is in this giant range over the course of... See, it's been in this range since 2019. Just kind of in this huge, popping back and forth. Still kind of in an upward trend. Rejected off of that 114 range. Earnings is kind of all over the place. Obviously, the company makes money, but their net margin has dropped quite significantly over the last few years, or last couple quarters. Still around a 10% annual margin, but its last quarter was at 4.39%. What do you have to say about this, Max?
Starbucks is interesting because they're going to be a tariff affected. This is going to be a tariff affected earnings for them. Revenue, we're expecting $9.29 billion, up 2% year over year. Not a great sign for them, by the way. A lot of these were indicators for me that this could be a very aggressive sell-off we see from Starbucks potentially. EPS, we're expecting at 64 cents, down 31% year over year. Same store sales are likely flat, and that is never good for them. Margins are absolutely getting pressure cooked right now to death. Now, what happened last quarter? Q2 was a bitter cup of coffee. Let's just say that. Profit fell 50%. Margins slid to 6.9%. U.S. and China comps are down, which shows that their demand is cooling. Companies skipped full year guidance, and EPS missed by 16%, triggering a sell-off. But behind the scenes, Starbucks is fixing the machine, literally. So they've cycled through 4 CEOs in 4 years, struggling to keep up with mobile orders, long lines, and new competition. That's insane, by the way. 4 CEOs in 4 years? Jesus. CEO Brian Nicole is flipping the script. focusing on tech upgrades, shop level execution, and what he calls a return to the brand soul, being a third place between home and work. Oh, God. And it might be working. Wait times are down 2 minutes in pilot stores, ceramic mugs, free refills, better shift systems. Matcha sales are up 40%. Yeah, that's a real metric, by the way. Now, what are we going to watch on Tuesday? Same store sales in US and China. Like I said, same store sales are a big deal for these people. Comps have declined, though, for 5 straight quarters. Flat is the new up for them. So if they come in flat, expect that to be a beat. Margins. Will labor cost inflation crush Q3 again? Watch for anything greater than 7% in that world. Anything greater than 7%, that's what you're looking for. EPS decline. A 31% year-over-year drop is expected. Can they at least beat the low bar? Like, if you're getting a 31% downgrade year-over-year, that doesn't show a whole lot of confidence. But it also sets you up to surprise on the upside big time. And guidance clarity. Will they reintroduce full year guidance, or are they going to keep things murky and behind a matte screen that none of us can see still? The CEO playbook is also here. Again, Nicole wants to restore those shop vibes, modernize operations, cut turnover and boost shift flexibility, and grow the footprint. He's looking to double U.S. stores. I have seen a Starbucks across the street from a Starbucks, so I'm not sure why we need more stores, but sure. But this is going to be a slow roast, not a quick brew, but it looks like some momentum could be building here. Now, the risk here, are we too optimistic? It's trading at a very aggressive forward earnings, and Starbucks is not cheap. If Q3 disappoints here, expect a very sharp pullback. Historical earnings reactions. Negative one-day return 55% of the time. The median loss is about 4.4%, and the max drop has been 16%. The volatility here could be spicy. So it looks like they have some real brand equity and a new leader who knows how to scale, but Q3 needs to show that the turnaround is more than just a press release. If they miss or offer weak guidance, this premium valuation is not going to hold for very long. For long-term believers, this may be the quarter that resets expectations, though, and sets up a stronger full year 2026. So I don't know. I'm not, as you know, I'm not very bullish on consumer stocks right now, or things that are consumer driven, just because people are not spending money. And we have PCE coming out, personal consumption coming out this week, and that should even shed a little more light into some of these sectors. And it could honestly give us a little more insight into what we can expect with some of these earnings reports. Now, one thing that is interesting is the new CEO of Starbucks right now is the former CEO of Chipotle. And you saw what happened when he left Chipotle, and we saw what happened with Chipotle's last earnings. But we also saw where Chipotle was driven by that guy. So Brian may know what he's doing here, and he may have some real plans. I really hope they don't scrap guidance again, because that never ends well for anybody. But I have a feeling they may reinstate FY again. And yeah, I don't know. I'm mixed on Starbucks, because it really is going to be dependent on, do they give guidance? If they do, is it going to be what people are expecting? Because it's a pretty low bar for them to beat in terms of earnings. Like, it's not like Palantir or SOFI, where they're going to have to pull a literal unicorn out of their ass to get anybody excited about anything. It's definitely, and these are the earnings plays that are a little safer, in my opinion. The ones where the bar is already kind of set low, they've been on a decline for over a year. At a certain point, they have to turn around, and that's when if you're going to take a long shot, Starbucks might be your good pre-week long shot, because at the end of the day, it's low expectations. So most likely the contracts aren't going to be juiced to the tits. Like, it's going to be a pretty easy to get in and get out. The biggest thing you'll just need to look at is the open interest on the contracts you're getting into, because if there's not a ton of open interest, you might, what is it? Where you go around moon trip, round trip. You might end up round tripping your bag where you are up 150%, but there's only like 4 contracts in open interest that can actually fill you. So it's just one of those things where I think low expectations, a new CEO who hopefully will stick, because I don't want to hear that they've had 5 CEOs in 5 years. So like, yeah, we just gotta keep on the lookout for these guys, and see what ends up happening with that guidance call. Because again, those beats are not very 2% on revenue. Come on, you can't show a 2% increase year over year on revenue for a coffee shop where you have influencers and teenagers addicted. I find that hard to believe. So EPS is going to be the big question mark. I'm curious to see what happens there. Same store sales, we just need those to come in flat, because, well, they've been down for the past 5 quarters. So flat is the new up for them, and that's a great sign for me.
Yeah, I agree. Definitely muted expectations or low expectations. Definitely could see if they come out and are just a little bit higher, or like you said, just flat, that could actually boost it. On stacks, we do see on the 23rd, just a few days ago, we do have almost 3 mil total being purchased in terms of calls. Some for September, the rest of them for January. 1 mil, 1.5 mil being spent on that January 105. So even if we do see a little bit of a sell-off after this earnings, I do think in the long term we might actually see this go higher, especially with the new CEO and everything like that. You know, he's definitely been put in place to try to make them some more money. The one interesting, unusual puts are being taken for September of 2026 under $80. So that's but only $123,000 being spent. Insiders tend to be selling, not too much activity, especially recently. Just for this year, there are only 4 of these that are sold, so keep that in mind. Equity in terms of something this big, 40 mil, 67 mil, 84 mil, those are actually pretty small amounts for something like Starbucks. But yeah, I would say, switch over. PE ratio 34, and their net margin staying around that 10%, but the net margin for this last quarter was a bit lower than usual. So I drew out a few lines of resistance and support. Definitely if we see it head down, see this 90.95 range, down toward 88.33, and then down toward 85. If we see it pop, we could definitely see it quickly above 97, 100, almost 101, and then the other resistance 103. So, I'm thinking CEO's probably knows his job is on the line, so looking for that to at least come in at expectations, if not a little tiny bit higher, if anything. All right. Last one for Tuesday, STX, which is Seagate. Definitely made a run up. It's in a bit of a bull flag pattern up toward the top over here. The thing that really intrigues me about this name is that we did have a stacks print come in quite recently on it. So STX. Overall, as a name, you don't see too much activity, and a lot of times this activity all tends to be unusual, but we've got these calls that came in on the 14th, I believe. Yeah, on the 14th, March 20th, 2026, 190 calls, 1.33 mil, and then we also had some puts being sold later, about a week later, puts being sold for 105 for 2027. Now, do I think at 150 you're going to see this come back down to 105? Probably not. So these are really just, they're trying to sell these puts to you know, take that theta value out of it, selling for $7 per contract there. We'd also add these calls. I would say for a earnings play, these are kind of pricey. September 19th, 150 strike, but I definitely could see it peak up above 150 in due time, especially with the way that this chart looks. Let me go a little bit closer on the chart for you. If you just kind of look in here, we've got this where we're near these all-time highs. We're just kind of in this bull flag pattern. So, and another interesting thing is we just had a wick down below here. So I do think that we could see it push above that 150, eventually 154. Question here, I would say, is how much time will that take? Down till September, possibly. That is definitely a possibility, but I think if they are able to report some solid earnings here, maybe some new news or things like that, we'll see it head up above that pretty quick.
I got some numbers for Seagate that are pretty interesting. We're expecting EPS to come in at $2.46 a share, which is a rise of 134.3% year over year. So right off the bat, great sign, if I'm being honest. Revenue, we're looking at $2.41 billion, and that's 27.5% year over year. So they're already primed and set up to have a solid report potentially. And the consensus with them is, will they beat again? It's not a matter of if Seagate's going to beat, it's more of how much will they beat by, because historically they do well in earnings. Now, some underlying drivers for these fellas and ladies. Seagate, it's seeing a demand for mass capacity storage. And this is because of cloud requirements. Because guess what? When you send stuff to the cloud, it has to go somewhere. And it's probably into one of Seagate's HDDs, because their HDD demand has absolutely accelerated at this point. It continues to see strong demand for high capacity nearline products from cloud customers worldwide, coupled with a gradual improvement in the VIA market. This is expected to have increased revenues and profits in the June quarter. They're also expecting secular trends and innovations to increase areal density, benefiting mass capacity storage. Management noted that the launch of the Mosaic 3+ hard drive platform in 2024 it positions it well to capture market share in mass capacity storage solutions as well. And then Seagate's technology strategy remains closely aligned with shifting market trends as well. And that's another thing that they have going for them. That's the nice part about being in the storage space. You can kind of just move to whatever the next thing is with minimal to no impact, because you're just going to be benefiting other businesses at the end of the day. Now, with the ESP, it's looking at 2.34% right now. And most analysts right now have rated this stock as a buy. And that's another good sign going into earnings. Typically, you'll see a lot of investors and analysts move their rankings to holds if they do. So the fact that this is still a buy from a consensus standpoint is a great thing to understand as well. Some other companies that are similar to them, most notable that we'll probably talk about, I think, later this week, is Qualcomm. So this STX earnings report will give us a little insight into what we can expect to happen with Qualcomm here. So that's another thing to keep in mind here, folks, is a lot of times, like if Starbucks doesn't do well, for example, the Cheesecake Factory isn't going to do well because they're owned by the same company. So if it's a lot of these can correlate and will run if they have similar setups in a sense. So Qualcomm, STX, I expect them to kind of work in tandem in a sense, where if one beats, the other's probably going to beat. because that's what we're going to see the reaction of that sector going to be.
Yeah.
Overall, I like these numbers that I'm seeing with Seagate at the end of the day.
Yeah.
The fact of the matter is I have Seagate hard drives in my house. I have built computers with Seagate hard drives. I've used Seagate quite a lot. Have I ever invested in it? Not really. But at the end of the day, I know it's out there because I'm actively buying it on a consistent basis on a consumer level. So I can imagine, especially with everybody moving to more cloud storage-based systems, those drives are going to become more and more important. And if they're going to continue to be the leaders in it, I see many, many more green quarters and earnings beats for them in the future.
Yeah. Yeah. Definitely something that, in the long run, they're going to do well. PE ratio is only at 22. So, I mean, I don't think too much of that forward-looking guidance is actually really priced into it just yet. I think definitely can see this well above 160 in due time. All right. Those are all the ones we've got for up through Tuesday. I know we've already been streaming for almost 2 hours now. But I know I wanted to get you guys a peek at Meta, Microsoft, Apple, and Amazon because those are coming up on Wednesday and Thursday. So let's just go ahead and take a quick look over at that real quick. We got Meta coming up. Meta near all-time highs. Companies trading at a 27 PE ratio, which is, I mean, fairly low compared to where it's been before. Zuckerberg's doing a pretty good job making sure his company's making a lot of money. On the weekly, though, we are pretty high and overextended, so I would not be surprised to see a little bit more of a sell-off before this potentially heads up further. Just been in this range between, I mean, it's a big range that it dropped back in April all the way down toward 483, back up towards 700 at this point. All right. If we take a look over at stacks, though, I think stacks has a little bit of that similar sentiment that we're near those all-time highs and we could see a little bit of bounce back underneath 700 is kind of what I would aim for. This here where it says 325K for August 1st for the 735, I mean, for a company as big as Meta, that's actually fairly small. And on the 18th, we did see quite a few dark pool prints, but 34 mil, 74 or 47 mil. There is one where they did purchase $435 million in terms of just the equity, just the stock itself. Even again here on that same date in the morning. So they are still quietly and accumulating and buying in this situation. It is one of those companies that, I think that I saw a statistic of how like over 50% of people use some sort of Meta product throughout their day. Like, that's ridiculous. Instagram,
I mean, that kind of makes sense.
Instagram, WhatsApp, Facebook. They have a pretty strong hold on the industry overall. But I would probably say in terms of this earnings report, just because we're so high up over here on this chart, I would not be surprised to see a little bit of a sell-off before, even if earnings are good. Big money is going to want to try to take some of the extra liquidity before they can head up further. So I wouldn't be surprised to see this maybe form more of like a cup and handle type of shape before it goes up further. But that recovery, look at that V shape, man. That recovery from April lows all the way back up. For a name this big, already up 50-something percent, 51% from that. Pretty nuts. I'm gonna have Max save his full analysis for you guys for later. Let's just go through these charts real quick since we've been at it for so long. Microsoft chart, same idea, super high up. All right, since the April lows, up 48%, peaking out above all-time highs definitely could see more to come. 39 is the PE ratio. But I will point out, especially on this daily, you do have a little bit of negative divergence. So on the top end over here, we keep seeing higher and higher. But on this stochastic, we're starting to see it come back down a little bit lower. So yeah, it could still pop, but I would say if it does sell off, the sell-off might be kind of strong. Come back down, back underneath 500 pretty quickly, back toward about 488 if anything, if not further. So I'd be a little bit careful with Microsoft with it, especially when you go into earnings at these all-time highs. You have to remember a lot of stuff's already probably priced into it. Stacks real quick shows you guys what are the short-term above 525, 515, 512 are the short-term ones for the 1st of August. We've got some 15th of August. Just be careful. A name this big, especially looking at where IV is going to start to pop for next week, I would not be surprised to see the IV of these quickly hit 50, 60%, if not higher. So keep an eye out for that. But a lot of buying, especially on this 18th, we saw a lot of buying, over $1 billion being spent on Microsoft at that 508 level. But keep in mind, equity could just mean that they're playing for the long run, could be holding on for years, if not decades from there. Apple. Apple, I know, has had a little bit more in terms of their headwinds, especially with the tariffs, especially with them trying to figure out where they want to continue to manufacture everything from the lows. Only up about 20%, but it looks fairly strong. It's kind of got a little bit of a wedge pattern here. It still has a bit more of the gap to fill. I would not be surprised to see maybe that gap fills the rest of this week up through Wednesday, and then after earnings we might see a little bit of a sell-off. That I think that might be the possibility for this. PE ratio down at 33, not too bad. But yeah, this pattern right here, we very possibly could see a little bit more downside. It's got kind of this wedge pattern going on. What does Stacks have to say? Stacks, a bit more bullish. Oh, very bullish in terms of the most recent prints. But I will have you guys keep in mind, this is all just for through Friday of last week, especially with something that's reporting like Apple, which is reporting Thursday after close. We've got some time, so keep your eyes peeled, especially this week. If we see any of those big money and unusual prints start to come in, you know, I'm sure people in the Discord are going to notify you guys, especially if you're in the Stacks software. Yeah, if you look at unusual prints, a lot of Apple stuff's all bearish, so interesting to consider. Last but not least, we have Amazon. I'll do Amazon and I'll do MicroStrategy just to end it off. Amazon, huge run up since the lows, but it's really got this wedge. It looks like a wedge. So I would not be surprised, especially with consumers, you know, having a bit more struggle this quarter. We probably could see us back down toward that 220 range, if anything. It's run up pretty quick, especially, and starting to see a little bit of negative divergence as well on that name. Oh, I didn't switch my... There we go. There's the wedge. Back down toward that 220 range is probably what I would expect, especially over here. We are starting to see a little bit of divergence in terms of our indicators. Swap back over to Stacks, see what they have to say about Amazon. Ooh, very bullish in terms of last week going into the close of this Friday. Aiming above 245, above 240. Shorter term contracts. a lot of it's setting up for 2020 or end of 2025. We've got some September, some October, even December, and this one as well here for 2027. They're buying really, really far out, so above 300 by then. Amazon's one of those strong names over time. They should do pretty well, but we're gonna have to see how their Prime Day should be reported during this one too. So I heard Prime Day wasn't as strong as it used to be. Did not quite meet their expectations. So yes, that's probably priced in, but any sort of negative forward guidance on that is probably going to cause this to sell off.
Well, I do know their Prime Day was affected because it was like a lot of their stuff comes from overseas. So when those preliminary tariffs hit, basically the free shipping made up for the increase in costs that people were paying for the actual goods. So I know that's why it was a little bit of a flop, is people just weren't shopping because they're like, well, tariffs are going to hit and that stuff's from China, so it's going to be more expensive, or it's from Europe, so it's going to be more expensive, or it's from wherever. It's not from America. We know that. So I definitely know, like, it was not a great turnout for them in terms of that either.
Last one I've got for you guys today. Keep in mind, we're going to go over these more in depth on our closing bell shows throughout this week, but I just want to get you guys a preview. This is really interesting. On MicroStrategy, on stacks, if I click big money, it just shows a bunch of calls. Everything's basically aiming for upward. Maybe a few of these in here. But then if I click on to unusual only, it's basically all puts. The thing about MicroStrategy, it's one of those names that I would say is kind of fun to play because it moves so quickly and you can see very big profits very quickly. But you got to understand, especially with earnings coming up, your IV is probably going to be jacked. These ones already well over 100%. Big money, peek at that as well. Big money too. IV in the 50s to 60%. So remember, it's one of those things where you got to be very careful. IV crush more than likely is going to crush both sides after this earnings report. For the chart, you saw what I drew out. It kind of bounced a little bit higher than what I originally had drawn, but yeah, it's come back down. If they are able to report very positive earnings, we could definitely see this run up back toward that 450 range and then come back to try for those all-time highs. But MicroStrategies, I always thought they play a very risky game, especially with how much money that they have going into Bitcoin. And one of the things as well is they keep selling their shares so that they can acquire more Bitcoin, which is only diluting their their market share, or not market share, diluting their shares each time that they do that. They keep on giving more offerings. Some people have characterized it as kind of a bit of a Ponzi scheme. So that is one of the things to be careful. If Bitcoin ever has a major correction, I'm saying 50 to 60%, MicroStrategy screwed. So they've got so much money in it at this point, but their market cap is also ballooned because of it too. Man, if you guys made it all the way down to this, all the way through that with us, I applaud you guys. I know there's going to be a lot of people that are watching this after the fact. Please leave us a comment if you were watching later on. If you guys can, give us a thumbs up on YouTube. That way we can, play the algorithm the way that we need to. We will be back at this probably for a short one on Monday. Very likely we're going to watch some of the closers on Tuesday, and as usual, our Wednesday show. We'll discuss maybe even a Thursday. We might have to do 4 streams this week. But it is that kind of a week. It is that crazy in terms of how big of names are reporting for our earnings. As always, if you guys want to try out Stacks and use it, we do have a code for right now. If you guys want, use Stacks 10, get you guys 10% off your Stacks monthly membership. If you want a little bit more, are willing to commit to the annual membership, use July 2025. That's only going to be available for a couple more days actually before that will no longer be used. So please, if you guys do, go ahead, sign up for Stacks. You guys can do a little bit of analysis. You can converse with us. And a big thing that we did recently add is my channel is now available on that Stacks Discord. So you guys can see over here on our Discord in here, you will see us continue to converse in here. You'll see all of those earnings write-ups by Max under the TG Trades, and then you can get everything you guys saw with me here on my channel as well. We'll post the rest of those as the week goes on so that you guys are ready for these upcoming earnings. All right. Anything else, Max?
No, that's it. I'm surprised. I did not realize that we had been on here for
2 hours.
Almost 2 hours and 15 minutes.
Yeah, it was a long one. I mean, we know it's going to be a long week, and a lot of people are probably here trying to hear about what's going on with Apple and Meta and those big names. But we want to make sure we cover our bases because there's definitely a lot of opportunity out there. If you're in our Discord, let us know if you watched it. Let us know if what you're going to be looking to get into, and especially if there's anything that comes in on Stacks. That's what our community is here for, to discuss the things that you guys see, because not all of us are always glued to our screens, but you know, from time to time certain people catch things that maybe Max and I don't. So in the description box below, we've got Max's Substack, his YouTube. Make sure you subscribe to those. I will be sending out a Beehive newsletter later today as soon as I get all of this stuff compiled, get you guys ready for your week. But we will be back at this tomorrow, Monday. Give you guys a little bit of a closing, see what Max conjures up in terms of his analysis as well, and we will, you know, hopefully have a profitable, solid green week for you guys. So keep that in mind. We will be back at it tomorrow. If you guys miss out on that, you should always be able to watch these after the fact. All right. With that being said, this is Eric, eRoo here. We've got Max, Unusual Markets, TG Trades. We will see you guys in our next one. Have a great rest of your day, guys.